Look, we all know how frustrating it can be to never quite get ahead financially. You're not hard off living paycheck to paycheck, but you're definitely not living in the lap of luxury, sipping champagne on the back porch during the afternoon while you're watching your net worth grow. In this video, you'll get the tools and hopefully motivation you need to take charge of your wealth building today. So if you want tips and strategies that will make you a master of your money, subscribe to this channel right now. The first step in becoming a master of your money is determining your net worth. Now, don't let this be a discouragement, but we need a starting point so we can determine the path to your goal. To determine your net worth, you'll need to balance your assets with your liabilities, which also means that we'll need to know the difference between the two. We interrupt this broadcast to bring you an episode of Is This an Asset or a Liability? Welcome to Is This an Asset or a Liability? Today we'll ask our financial expert, Professor Sharp, to weigh in on whether something is an asset or a liability. Professor Sharp, please explain the rules.
Thank you, Stephen. Thank you. Pure and simple. Just as Robert Kiyosaki points out in the book Rich Dad, Poor Dad, if it is an asset, it generates revenue for you. If it costs you money, it is a liability.
How about my car? 2017 Honda Pilot, totally paid off, still in great condition?
Negative. It earns you no money. It depreciates in value each month, and it is a constant drain on your finances for upkeep.
How about my book collection?
No.
Golf clubs?
Nope.
Computer?
Try again.
Possibly this half-empty bag of chocolate chips?
Negative.
Okay, so do I have any assets?
Think about the things that earn you money each month, like a retirement account or any mutual funds. Perhaps some intellectual property.
How about actual property, like my house? Can I count that?
Financial professionals are divided, but I count your home as an asset. After, of course, you subtract the home's current value from what you owe on your mortgage.
Finally, yes. Go ahead and open a new Excel sheet where you can write down all of your assets and their current worth. Then you'll need to subtract any liabilities so you can arrive at your actual net worth. Look for items like your home's current value, your retirement accounts, any savings or additional investments. Then subtract things like student loan debt, car loans, remaining mortgage. You'll arrive at a total to determine your net worth. When you look at net worth nationwide, there are averages and medians for each age range. Now the big difference is due to incredibly high numbers on one end of the spectrum, which skews the numbers for everyone else. So think of the actual average somewhere between these two numbers depending on your age range. Once you determine your net worth, you are ready to move to step 2, which is establishing your financial goal. Good financial goals follow the SMART acronym. What is the SMART acronym, you ask? Let's have Professor Sharp break it down for us.
Quite simple, really. But a true goal needs to align with 5 criteria. Specific, measurable, attainable, relevant, and time-bound. A goal needs to be specific and clear. It needs to be something you can measure so you know when the goal is met. It also needs to be attainable. Ambitious, yes, but not too ambitious or it will be hard to achieve and be discouraging. It needs to be relevant to you, have direct benefit. And of course, finally, it needs to be time-bound. It needs to have a specific time frame to keep you on track.
Thank you, Professor. So your goal needs to align with the 5 criteria of SMART goals. You've calculated your net worth so you know where you are. Now, determine where you want to be. Then, determine when you want to be there. Let's say you want to be a millionaire. You want to have $1 million as a net worth. Now your current net worth is $200,000 between your home and your retirement account. And that means you need to grow $200,000 to $1 million in a certain period of time. Now, obviously, you want to do it in the shortest time possible. But at the same time, you don't want to set too ambitious of a goal that you'll be unable to attain it. As Professor Sharp would say,
goals must be attainable.
The quickest way to determine this is to find an online investment calculator. Now, the different assets in your net worth will appreciate at different rates, so really this is a little bit more of an educated guess. But if you start with $200,000 and you're willing to save $400 a month, and you expect an annual rate of return of 10%, then you'll reach your goal in 14.5 years. Now that's not bad at all. But here's where you can decide if you want to supercharge your goal without overplaying your hand. First, consider your mortgage. Can you refinance at 15 years instead of 30 to get a lower interest rate? Even a 1% lower rate will save you $2,500 a year on a $250,000 mortgage. And you'll pay off your house in half the time, building your net worth quicker. Second, consider your investments. Are you maximizing your returns? Are you getting 6 or 8% when really you could be getting 12% or more? Look, this channel is built around the concepts taught in the book The 12% Solution by David Carter. And I'm not going to beat around the bush. If you care about taking charge of your wealth, you need to read this book. There's a link in the description below. The book outlines how you can master your money with just 1 or 2 trades per month to earn, on average, a 12% return or better. And you want to take this a step further and get even higher returns? Check out trendlineprofits.com for our subscription-based trading strategies designed to help you capture higher average returns while minimizing risk. And hey, the first 2 months are free, so there's really no excuse. Check it out. Now determine the time-bound aspect of your goal. Are you going to say 13 years? 12 years? Are you going to shoot for the moon and say 10 years? That's your decision. Just make sure your goal is smart and you are committed to bringing it about. Then move on to step 3. Write it down. Write down your goal. Write it somewhere large and where you see it every day. Buy a whiteboard and attach it to the wall in your office. Write it on a piece of paper and tape it to the mirror in your bathroom. Look at that goal day after day. A goal is only as good as the effort that you put into making it a reality. And by facing it each and every day, you will internalize that goal. And then you'll work creatively to bring it about. You'll begin developing streams of passive income to get to that goal quicker. You'll work to increase your rate of return. You'll invest in your greatest asset, your mind, by becoming more financially intelligent. You'll put yourself on the path to really what we're all after, which is financial freedom. Thanks for watching this video, and be sure to subscribe to get more tips and strategies that will make you money smart and ready to set amazing financial goals. Hey, do you want to jumpstart your investment portfolio? Check out M1 Finance. Click on the link in the description below to go to M1 Finance where, after you create an account and fund it, you'll get $30 for free. That means if you put $100 in, your account will grow by 30% with no effort on your part at all. Start trading today to build your wealth for tomorrow.